been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is CEO of the Morgan Group, Philip Morgan. Now, as Chief Executive Officer, Philip is responsible for leading Morgan's strategic planning and growth across all business activities, including development, acquisitions, construction, and property management. Since joining Morgan, Philip has been involved in the development and acquisitions of over 7,000 units at a cost exceeding $1.8 billion throughout Texas, Arizona, California, Colorado, and Florida. Now, prior to joining Morgan, Philip co-founded BlueRoot Partners to take advantage of opportunities acquiring distressed real estate assets in Texas. Now, Philip holds a Bachelor of Science in Economics from the Wharton School at the University of Pennsylvania, guys. And so I'm excited to have him here. Really excited to chat with Philip here today about the Morgan Group, about, just the history of the company. It's got a very, very deep-rooted history. And but before we get into it and get into the meat and potatoes, just have a few announcements I'd like to run through. First and foremost, we just recently launched our third mobile home park investment fund. If you guys want to learn more about partnering with me and my team on future opportunities, you can go over to investwithsunrise.com. Again, that's investwithsunrise.com. There you can watch our most recent webinar and access our PPM and offering docs and just learn a little bit more about why we love the manufactured housing space or mobile home park space so much. Moving on here, if you love what we're doing at the Real Estate Investing for Cash Flow podcast, please take a moment, subscribe if you haven't done so. That way you get notified of all new episodes that come out. And also, if you haven't done so and you feel like we add value to you and your business each and every day that you listen, please leave a rating and review. It really helps us attract awesome guests such as Philip here to the show. And then lastly, before we get on with it, just want to remind you of the free 30-minute call I offer each and every Friday afternoon. This is where you can schedule a time to jump in the horn with me. No ulterior motives here. I've been doing it since I started this podcast many, many years ago, and just a way for me to connect with other like-minded folks that share a passion for real estate investing. And it doesn't matter whether you're brand new or a seasoned pro. I've spoken to hundreds of you now over the years and would love the opportunity to speak with you. Go to my website, kevinbuck.com, to get signed up for that call. Now, guys, without further ado, let's get on to the part of the show you've been waiting for, which is our interview with Philip Morgan. So, Philip, how you doing today?
I'm doing great, Kevin. I appreciate you having me on. Looking forward to this.
Yeah, excited to have you here. And some really big news that occurred in the middle of this year, right back in July. That you took the throne of CEO of the Morgan Group. So congratulations! Just want to throw that out there. I was reading through the press releases, and so big news in 2020 for you.
I appreciate it. What a time to be thrown into that position right in the middle of a pandemic. But no, it's been an exciting time and one that we've been planning around for a while now. And so I'm really thrilled about the opportunity and humbled by it.
Yeah, good deal. Well, as I'd mentioned, the Morgan Group has a very deep-rooted history. And so I'd love to chat about that. Before we do, maybe take a few moments, Philip. For those that aren't familiar with you, your background, I mean, I gave you a really brief bio, but, your background's a little bit more extensive than that. You grew up in the family industry, what have you. Maybe take a few moments. Just tell us a little bit more about yourself. And I know how you found your way to the Morgan Group, but maybe let's talk a little bit about before that. Like what were some of the precursors prior to you joining the family business?
Sure. So I grew up in Houston, as you mentioned. This is where our company's headquartered, and I did grow up around the family business, although, never really grew up with the expectation to necessarily go work for the family business. I guess, just always being exposed to it, it's in the back of your mind, but did always have an interest in real estate. When I graduated from high school, thought that I would leave Texas to never come back, and went to college in Philadelphia, like you mentioned, which was an awesome experience for me. Really, grew to be more and more interested in real estate, particularly the finance side of things, and graduated in 2009 during tough job market to get a job. So ended up initially briefly moving back to Houston for a real estate analyst position for a student housing company. I was only there for a few months, wasn't getting the exposure or learning quite what I was hoping to, and ended up, randomly, I was at a conference and met one of the speakers who had just started a real estate debt fund in New York. And essentially on the spot, he offered me a job to be his personal assistant, which I took. So I left the coveted real estate analyst position that was kind of the first job out of school to go be a personal assistant. And it was definitely one of the best career moves I made. So I was lucky to have an amazing mentor that, aside from being his assistant, exposed me to all kinds of things. It was really wonderful, and was in New York for a couple of years. And that was when I left after a couple of years and launched a company with a close friend of mine, who's been a coworker of mine at Morgan for the same time as me, but he was in New York at the time working for a special servicer, and had dealt with a lot of distressed loans coming on his desk. And so the two of us naively thought that we should be buying distressed assets as opposed to trying to invest in them. And so that's what we did. In 2011, we left our jobs, and we ended up, I convinced him to move from the Northeast where he grew up down to Houston. And we bought a couple of distressed properties off of auction.com, which is a bankruptcy auction site. And that launched BlueRoot Partners. And then a couple of years later, we sold out of those, and that started the journey at Morgan Group. So it's been quite a ride.
All righty. Yeah. Exciting. And as far as BlueRoot Group is concerned, that investment firm, what type of distressed assets did you guys focus on? Was it also multifamily?
It was also multifamily. We looked at a lot of things. We ended up, I'd say the biggest investment we made, we bought a non-performing note backing a 224 unit complex in Southwest Houston, and foreclosed on the asset, took ownership, invested and oversaw a rehab, started a management company, and we officed out of the leasing office there, and oversaw getting the occupancy up into the mid 90s. So it was it was a Class C multifamily complex, and it was a good project.
Yeah, very exciting. And so then you enter into the Morgan Group, and I spent some time on your website, a very informative website, and read some of the history of your grandfather, Bill Morgan, the founding of the company, but more so the history of where he came from. I mean, it just as an immigrant in Poland, dealing with the war, escaped the ghetto, basically made his way to a farm to kind of hide out for a couple of years, and then jumped on a ship and came to the U.S. with no money, sixth grade education, couldn't speak. Well, maybe could speak a little bit of English. I'm guessing probably not so much, but a lot of persistence and really a vision to do something bigger with his life. And that it really struck a chord reading that, because you're finding the times that we're in here today, and all the luxuries that each of us are given, right? I mean, like there's just so many things that we don't purposely do, but we take it for granted. And then you look at a story of your grandfather coming here with literally nothing still as a child, and really by himself without family, and build into something just magnificent, something that I'm sure that you're incredibly proud of, your family's proud of, and that everyone that works for the Morgan Group is proud of. And I'd love if you could, Philip, maybe take a few moments and expand a little bit on that story, the founding of the Morgan Group, and also, just how you guys continually today integrate, his philosophy and his principles into the business.
Sure. Well, I think I could probably take up more time than you have telling his story. It's a wonderful one, and you can see it on our website. He's also written a book, but no, it's unbelievable what he lived through, and certainly puts, a lot of the challenges today in perspective, at least for me. And it's amazing. But basically, he grew up in a poor village in Poland. The Nazis invaded. I think he was 11 or 12 years old. He had, was able to work, so he was able to leave the ghetto and got exposed to murders and seeing what was happening and knew, the writing essentially was on the wall. So had a very difficult conversation with his parents and said goodbye one night, got fake Christian papers and snuck out on a train, never to see his family again. He ended up being the only survivor, not only from his family, but from the entire village, and essentially just, worked odd jobs on different farms throughout the war. After the war was over and he learned that he had no, remaining relatives, he got on a boat and came over to the U.S. He was sponsored through YMCA, and his first job was as a janitor in a shoe store in Cedar Rapids, Iowa, and came over, didn't know English, no money, but as you can imagine, his work ethic from everything he'd lived through was second to none, and his just determination to succeed was also second to none, and worked his way up to sales floor and then manager, and then was opening a new store, and ultimately saved up enough money, drove to Houston. He taught himself English by watching Roy Rogers on TV. And so he thought he would find Roy Rogers in Houston. But as he tells the story, his car broke down in Houston and he did not find Roy Rogers, but he found my grandmother. And so that's how he settled in Houston. And in Houston, he got into the food business, had a deli downtown that he owned, and then ultimately kept saying that, the people selling meat and food to him were making more money than he was. So he got into the food distribution business. And like his aha moment was when he sold that business, but kept the real estate and started getting rent checks. And that's when he knew he wanted to be in real estate. So from there, just, self-taught, ton of common sense. And like I mentioned, he was not afraid of working long hours and just would walk job sites and ask a million questions, and started building throughout Houston and doing all different asset types within Houston. And my dad's one of 5 kids, and they all grew up around the business. But you asked me specifically about, his vision and his philosophy. We have an award every year that we give out that's named in honor of him, the Bill Morgan Award. And, we've tried to list out, 10 of his best attributes, and his DNA is very much a big part of what our company is today. And he's 95 now. He is still living and still, I talk to him almost daily, and he wants to know what's going on at work. And, he's no longer moving around as much as I know he would like, but he loves nothing more than walking by job sites and going by leasing offices. So he loves this business and loves this company. It's a pretty special story.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my 2 podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. Now, for those that don't know, I've been a full-time real estate investor for more than 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in Growth and Income Fund 3. When you invest in our fund, you get immediate diversification into multiple deals we acquired off-market that are already performing and have built-in sweat equity. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please visit us at investwithsunrise.com and request access to the investor presentation. It's absolutely free, and you'll get instant access to review the off-market deals that we've already purchased that you can co-own with our team. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-227-4359, and our investor relations team will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule the call. Let's jump on the phone. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. No, that's phenomenal, and thank you for sharing. And, you know, it's just an incredible persistence and just perseverance that he pushed through for many years and built something incredibly special. So, talk to me about the Morgan Group. You guys are in the multifamily space. For the most part, you are developers, if that's correct. But why don't you fill in the blanks as far as the Morgan Group, what it is you guys do, what markets you're focused in, just all the other important details.
Yeah, absolutely. So we're predominantly a multifamily development company. We also got into the acquisitions business a few years ago, and that's a piece of our business that we're looking to grow. We're vertically integrated, so we do our own construction work and property management. We've built over 20,000 units today. We've built in 11 different markets. Today we're active in Texas, Colorado, Florida, and Arizona. And we manage about 10,000 units today. And then we do it with a mix of strategies. So historically, I guess backing up for a second, my grandfather retired in the early 80s. And then my father got into business in the late 80s and started building with institutional equity partners. So a lot of what my father did for the bulk of his career was building and selling with institutional equity. That's still a very big piece of our business today, but we also have partnered with high net worth investors and family offices to invest longer term in real estate. So right now we're doing a mix of acquisitions and development and a mix of 3 to 4 year hold strategies as well as 10 years or longer hold strategies.
Got it. Was that, back when your grandfather was in the business, was it still mostly a development company that you were building not to necessarily hold, but building to sell? Or was he holding assets at that point in time?
Yeah, he did a little bit of both. We actually still manage a few properties that he built. We manage a couple of warehouses that he built, as well as 3 multifamily properties that he built in the 70s that he still owns. He also did sell a lot of what he built back then as well.
What was the catalyst, to actually start keeping more properties? I mean, is it just more of a long-term investment decision that you really want to start slowing down and start holding on to assets, or what was really the catalyst behind that decision?
Again, I think from kind of the late 80s through 2009, a lot of what we did was building and selling, and then it's really been more recent and something that I've been pushing more to keep. A big driver of that is it's hard to find, good places to invest your money. I think with where interest rates have gone, and just options that are out there, it's hard to get yield, and we take a lot of risk developing properties. And,
yep.
You and I were talking a little bit earlier about just, it's really tough to do what we do, and it's only getting tougher. And so when you have something great, it can be tough to part with, and you take new risk every time you start over. So that's kind of a stated strategy that we had. My father and I spent time studying that back in 2009, 10, 11, and looked back, on a lot of his career and studied, what in hindsight, which is obviously easy to do in hindsight, but if you could do it all over again, what would you have changed? And, there's many, many, many examples of deals you sold, and then they sold again for more, and then they sold again for more, and they sold again for more. And not only that, you're paying taxes along the way, and then, reinvesting and taking that risk all over again. So I'd say it's been kind of a series of events that have caused us to want to go long on multifamily, and a big one being just demographic trends. And it's a really solid business.
And so in this new, I guess not new, but this hybrid model, on the acquisition side, are you still doing brand new builds, development builds, or are you actually acquiring, existing properties as well?
Both. We'll do both.
Okay.
And I'd say we come at acquisitions from a development mindset. So we focus on the same markets we build in. We want to know what the development team on the ground, sees in terms of, construction costs and barriers to entry and zoning risk and all that sort of thing. And then we've done a couple that are value add, where we're going in and reinvesting capital to update the finishes where we think we can increase the rents. And then we've also looked at stabilized deals where we think the yield is good and it's irreplaceable location, and we're happy in the market that we're buying in.
What are some of the markets today that have you most excited?
Yeah, I mean, it's been a wild ride in 2020, and I think really we're just fortunate that we're in great markets. So literally, I think every market that we are in today, maybe with the exception of Houston, we're really excited about. Austin, we're extremely bullish on Austin. And in fact, we just opened a development office in Austin that's going to be running all of our Texas development. Dallas is a market that we have historically not been in, but we will be looking to build more in Dallas. Denver and Phoenix, where we've got projects going right now, those are both fantastic markets. I think they already were before this, and it seems like, COVID has just accelerated some of those trends. And then Florida, kind of the same thing. I mean, Florida is a great place to live. There's a ton of growth there. And so you're seeing, more exodus to Florida as well. So yeah. I think all four states that we're in, we still feel just as good about, if not better about now than we did this time last year.
Okay. Fantastic. Sticking with the pandemic discussion, have you noticed any trend state by state within your multifamily assets, whether the ones that you own or that you manage for other parties, as far as collections are concerned? Some markets or states that have just performed much better than others, or different classes of assets, maybe A class versus the B class, one perform much better than the other. Have you seen any big variations across the board?
Yeah, that's a good question. And we have certainly kind of clued on to collections from the beginning. And I think we now get a daily report as to how we're doing on a collection standpoint. I actually feel like the better story is really on fundamentals in rent, because collections, I think that was a concern, right when this started in March, April, May, and we kept thinking the next month was going to be the bad month. But essentially, we've been consistent, kind of 97 to 100% collected across all of our assets. But the bigger variation we've noticed is really on market fundamentals. And so when it's amazing to see what home prices have done. I think benefited largely from interest rates, and there's a lot less things to spend money on when you can't travel and do other things, and you're hunkered down. So we've seen fundamentals generally soften. And I think across the country, I mean, even a market like Austin, which is arguably the hottest in the country, you're still seeing, if somebody moves out of an apartment, the next person moving in most likely is paying a reduced rent. So that's what we've been more clued onto. And, that's varied market by market. I think the ones that stand out, and we're not active there, but just anecdotally, New York City,
Sure.
San Francisco, LA, I mean, some of those bigger markets, they're seeing pretty rapid rent declines.
Yeah, no, I do believe that they ultimately will come back, but it's I think it's going to take some time. Those states have taken a pounding, or I guess those cities have taken a pounding. But just it's interesting. I had this conversation with a good friend of mine that lived in New York during 9/11, and for months thereafter, it was I'll never work in a skyscraper again. I'm probably not going to be flying anytime sooner in the next couple of years. I don't want to live in the city, right? Like but within a year, everyone was working at skyscrapers again. People were flying normally. Travel was back to a normal scenario, and folks were living in the city, and they're happy to work and live in the city. And so I do think that times will change, and ultimately people will be drawn back into those urban type environments. But it's going to be a tough row, I think, here for the next couple of quarters still, as we work through this challenging pandemic, which seemingly hasn't gone away. It just keeps coming back stronger.
I agree with that. I think, one of the benefits of renting is flexibility, and as quickly as people can move out, they can just as quickly move back. And, living in New York or San Francisco, when there's not the nightlife and the restaurant scene and all the other things that you're attracted to, why would you pay those crazy rents? But all of a sudden the value proposition is going to change when you can get rent at 80 cents on the dollar and everything's reopened again. So I definitely believe those markets will come back. And just like your hunch, I think it actually happens sooner than people think.
Yeah, I agree. Are there any major shifts that you guys are making? Like, I know that, any future developments, I mean, you're talking 2-3 years out. If you're just in the planning stage today, before it actually breaks ground and is erected and folks are living it, you're talking years, right? And so it's not just an overnight scenario. But, given that, what 2020 brought us and the changes in behavior and folks wanting larger living spaces and outdoor areas, are there any major shifts within your developmental model that you guys are planning for or making for future apartment complexes?
That's a good question. I would say we spent a lot of time asking ourselves that same question. If any changes were made, I think they actually were made to deals that were opening up sooner, like deals that were opening up this year, beginning of next year. But or at least this is my view, is that I think a lot of things revert back to normal. I mean, it was hard, like, we were talking about touchless stores, keyless entry, all this kind of stuff. And, it's hard to know what sticks. And one of the challenges is we're building buildings that are going to be there for, many decades. And so it's hard to know what to do differently. And, a good example was, right at the beginning of this, people were like leaving their groceries outside their house for a couple of days and then wiping everything. And I don't know anybody that's still doing that today. So it's hard to know, what's going to stick and what's going to last. But in terms of, talking to our operations team and property management team, there's not a lot that we've seen that's here to stay. One thing that is interesting is, we're starting to see virtual tours, be really grow in popularity. And there's a few companies that are doing that. That'll be an interesting technology to watch to see how that evolves.
Is that something that you guys are actually conducting at your properties today?
Yes, we actually are just piloting that on one of our projects in Houston right now. We're gonna try it out and see how it works.
And so, exactly how does that work? Does it take a physical human being carrying a device around to give the tour?
Yeah, so I think you have an app on your phone, and you go to a keypad, and you fob it, and you get access to our keys, and then essentially you can walk around the community and give yourself your own tour, and then one of our leasing agents will follow up with you afterwards to see how the tour went. Although I do need to go try it, so this is just what I've heard, but essentially that's how it works. So it takes, right now, obviously, you're trying to minimize contact with other people, so it's an interesting technology.
Yeah, very exciting. I see that you guys you're over in the East Coast of Florida. You're down in Fort Lauderdale and Miami. You're also up in Jacksonville, but you're not in the other what I consider to be two of the other, major markets being Orlando and Tampa. Is there a reason behind that?
We are. We actually have a project under construction in Tampa right now. And then we have another one starting in Tampa next year, I think later part of next year. And then in Orlando, we have a project that will be breaking ground in January.
Okay, well, you proved me wrong. I guess I didn't see it on the website.
Yeah. No, it's just taking us time to grow throughout Florida, but we'll have 3 new starts in Florida next year, those 2, and then 1 in South Florida. And we love Florida. We're really bullish on all the major markets there.
Yeah. Talk to me about, since your time with the Morgan Group, everyone talks about all the great deals, the ones you make money on, exceed expectations, right? But very few people ever really dive into the deals that gave you more gray hairs, right? The ones that cause you to lose sleep at night, the challenging deal. So is there a particular deal that sticks out in your mind as to being one that just literally had so many barriers that you guys had to overcome, lots of brick walls you had to run through, and just, again, forced you to lose sleep because of the challenges associated with it? If so, I'd love to hear the details.
Oh man, I feel like that's in some sense every deal we work on. They all have their own unique challenges and risk. One for me is a project that took a very long time, and it was one that I ran point on several years ago, and so will always stick with me. But it's a mixed use project in Houston, in Midtown Houston, called Pearl Marketplace. And it was an assemblage of 3 different parcels of land. We needed a variance from the city for reduced building lines. And we had a 40,000 square foot Whole Foods grocery store on the ground floor with 2 levels of parking subterranean and then apartments above it. So it was a challenging project. There were many hoops to jump through. Ultimately very, very happy with the finished product there. And we're, getting close to wrapping up our lease up on the project. I think just now hitting 90%, but that was one that was, it seemed like every twist there was kind of some new wrinkle. I think we had just dug out our 2-level subterranean area right when Hurricane Harvey hit. So we served as a detention pond for Midtown Houston. And that was crazy. Literally filled up, the biggest swimming pool you've ever seen. So, that was one that definitely sticks out for me.
Oh my God. How long did it take to pump that out?
It took a while. There were certainly delays on that project, but kudos to our construction team and the subcontractors on that deal. They did a fantastic job making up for time delays. Of course, just as luck would have it, right when we're dug up 2 levels below ground, that's right when the hurricane hits. But that was a fun one.
So reflecting back, Philip, on your ride, with Morgan Group, prior to Morgan Group, you're only 33, so you're still fairly young, but you've done a lot in a fairly short period of time. But if you could, reflect back and go back and give yourself some advice when you're just graduating school, ready to get out and hit the open road, what advice would you give yourself?
That's a great question. I think. Just in hindsight, I think a lot of people put pressure on themselves for their first job out of school or their first couple of jobs out of school, what they want to do with their lives. And, I think there's nothing more important than just finding great mentors and finding something that you've got a passion in. And was lucky to have plenty of great mentors and still do. And that as well as, networking. And you can never, especially in the real estate business, you can never network too much, and you just never know, who you're going to meet or what it would lead to. And the bigger your network, the better. So those would definitely be my 2 pieces of advice for sure to anybody, getting out of school.
Yeah, no, that's great advice. Networking is a little bit more challenging today, but still very doable, thankfully, to technology. And again, hopefully we're at a point in time here over the next year where we'll start going to conferences again, and we'll start, doing the normal networking routines that I think a lot of us miss. I think the Zoom thing was kind of cool for the first couple of months, and I'm pretty sure that I think there's even a saying for it. And I forget what they're calling it, but Zoom fatigue or whatever people are getting from spending too much time on these teleconferences. But in any event.
Yeah, it definitely wears on you for sure. But it is, you can't argue that it's an efficient technology for sure. And yeah.
Well, Phil, where's the best place for folks to find you and learn more about what you guys got going on?
So our website is probably best. It's morgangroup.com. Or they could also just send me an email as well. My email is just Philip with 1L at morgangroup.com.
Okay, fantastic. Well, Philip, it's been a lot of fun having you. Really appreciate you coming on the show, and it's been a great time having you here.
Yeah, thanks so much, Kevin. I really enjoyed it as well.
Alrighty, guys, that's all we have for this week's episode. So until we meet again next week, this is your host, Kevin Buck, wishing you huge success. Take care now.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.